Ladies and gentlemen, how are you doing? This is Matthews from Forex Traders. I hope you're doing great. So I'm here with another beautiful video for you guys. I hope you enjoy it. Let's jump it right now. So probably you've heard this weight being thrown around here and there, right? The probabilistic mindset. What does it mean to have a probabilistic mindset or to think in probabilities? Okay. So, most of us by this time we must have realized that this is all a probability game, right? It's all probability. Like the previous video just did last, I think that 2 days. It's all probability, okay? And this is how professionals think about trading or investing, okay? It's a probability game because if we knew for certain, if we knew for sure that the trade was going to work in our favor, most likely would have been risking the whole lot of our accounts. But no one does, right? Unless you have a $50 account. Okay. So somehow we understand that it's a probability game, but we are unable to actually follow through with the rules to respect our trading strategy. We usually want to make money on a particular trade, thereby trading via trade by trade basis, which is a losing game. Okay. However, the professionals know better, therefore they trade via a series of trades. Okay, I read a quote some weeks ago, which I said, I have little or no confidence in the outcome of an individual trade, but however, I have so much positive expectancy over a series of trades. That's powerful. That alone is very, very powerful. Why? Because you have to actually reach a level where you actually are able to take trades, whether minded whether it's going to be a loser or a winner, provided you followed all your rules. So the most important factor should not be whether a trader has won or not. Why? Because we don't have to know what's going to happen in the market. We don't have that ability to know what's going to happen in the market. We don't. All right. So the only thing we can do is follow our plan, follow our age religiously every time. And while doing that, we must be able to respect our risk management every time. That's how it's done, folks. That's how professionals are able to remain consistently profitable years over, because they understand this principle and they stick by it. But most of us, we don't do this. All right. So we usually want to make money on a particular trade. A setup will look nice, and all of a sudden you're like, I'm ready to risk it all. I want to risk it all. And guess what happens? That's a trade that goes against us. Okay. So we need to be able to develop this mindset. You might have noticed by now that you take a beautiful setup like this, it worked today, but take the same setup the following day, it won't work. Why is that? The answer is here, ladies and gentlemen. It's all probability. It's all probability, and it's always been probability, guys. So, what I'd advise you to do is have an edge, develop an edge. What is an edge? An edge is simply a higher probability of one thing happening over another. That's what keeps the casinos winning over time. It's because they have an edge over the gambler, right? That's why they're able to make money consistently no matter what. because they have an edge in the market. How do you develop an edge? Develop an edge by backtesting, forward testing it. Okay, you have to do that until you've seen that it's profitable. Take hundreds of trades, test your strategy out there, make sure after all it's supposed to actually give you profits. Okay, I often wonder. I usually have a lot of people trying coming to my DM asking me, no, how much is your win rate? It usually boggles my mind. It's never been about the win rate, guys. It's never been about the win rate. It's about the risk to reward ratio that comes with it. Okay, so it's not about the win rate. You can have a nice win rate, but if you don't respect risk management, you're going to burn out. Okay, and most of the things that are advertised on Facebook, on Telegram, telling you that they have a strategy with a 90% win rate, which most of the time is actually not true. That's wrong. Okay, even profitable traders have a win rate of probably 60%, 60%. Professionals are professionals, and you have some scammers out there claiming to have a 99% win rate. Anyway, that's how it is. So it's all probability. You have to actually engrave this into your mind because it's always been like this. You never know the outcome of a trade. You never know what might happen on that particular trade because anything can happen. So you have to actually understand and be able to internalize this concept in your mind. Well, if you know that it's a probability game, if you know that there's no way to know which trade is going to win, then why would you want to actually put so much risk on a particular trade with hope that it's going to actually win? Why do you get that confidence? I don't know. So you have to understand. If you understand that it's probability game, then you must be able. It might be easier for you to actually follow your risk management. If you're risking 2%, it must be 2% consistently. Okay, risk 2% consistently, not you risk 2% on this particular trade and you're risking 5% on this particular trade. Now you think this trade is going to win, you risk 10%. No, that's not the way to do it. You must be able to risk 2% consistently. More especially if you only trade one setup, one strategy. Unless if you have different strategies which you can grade this to have a higher chance of winning, then probably can do that. But I would advise that you only risk 1 to 3% of your account. Okay, so you need to change the mindset from a series from a trade by trade basis to a series of trade basis. Like that, it becomes easier to even stick to risk management because you don't know which trade is going to win. Trust me, if we knew for sure that the trade was going to win, there was no need of a stop loss. We're going to be risking our whole accounts on an individual trade, but no one does that. Why? Because they know that there's a chance that the trade might fail. And if they know that the trade might fail, that's the reason why they use a stop loss, then it proves that it's a probability game. So let me just show you two ways of two kind of traders, like the examples of two kind of traders right now. So we have a professional trader and a retail trader right here. So on the left side, we have, actually let me start with the right side. So we have this trader. Both these traders take 10 trades. Okay, one has got a higher win rate and another one has a higher risk to reward ratio. So on the right, this trader takes 10 trades, and out of these 10 trades, he loses only 3 trades and he wins 7. But look at the net pips gained, 120, right? And you realize that this trader actually only won 3 trades out of 10 trades. But look at the pips gained, 520 right there. So you choose what kind of trader do you want to be. Do you want to be the kind of a trader with a win rate, with a higher win rate, and that makes less money, or you want to be the kind of a trader with a low win rate that makes money overall? So you choose. So clearly, on the retail trader side here, you realize that yes, he was having wins, but whether he had a loser, he was not cutting his losers short. He was hoping for the price to actually go in his favor once price has gone against him. Okay, and that usually doesn't work. That will just cause your stop loss to get bigger and bigger and bigger. Alright, so you don't want to trade like this. You don't want to trade like this. And oftentimes, when you have the strings of wins like this, usually they increase the lot size. Okay, you have a winner, you increase the lot size and it gets smacked in your face like that. So that's no way to trade, guys. So look at this one. He's consistently risking, and look at this. This is 20 pip stop loss. This is 15 pip stop loss. 50, 25, 10 pips, 15. You see the numbers are similar. Okay, if you compare it to this is like random. This is consistency right here. So even on the risk management, even on the lot size position, position sizing, find that this guy right here is going to be risking the same or the consistent number of lot size that's going to be used, unlike on the other side here where this guy is just using random and is getting out whenever the market goes a little bit in his favor, it gets out like that. Okay, that's how most retail traders trade actually. So I want to change from trading like this to trading like this. Okay, so it's not about the higher win rate, guys. It's about how much money do you make when your trade goes in your favor. And if your trade goes against you, you get out as quickly as possible. When the trader goes in your favor, when the trade goes in your favor, you let it run until you can extract maximum profit. You try your stop loss behind structures so that you're able to actually get much of a particular trade until it takes out your trading stop loss. That's how you're supposed to trade. Of course, this might be different. You're looking at the money side. It's going to be a little bit different. But make sure, my point here is just showing you that you have to be consistent with your risks. Make sure you are risking a certain number of pips. If it's pips, if it's money, make sure you're risking a certain number of amount, or its percentage. Make sure you are consistent with that. Okay, when you're consistent, it's going to show in your equity curve. And if someone opens your account, they must be able to see some form of consistency right there. So that's how to trade like a pro, guys. Stop trading via a trade by trade basis and start to trade like a pro who trade on a series of trades. Understand that anything can happen in the market and you don't have to know what's going to happen in order for you to make money, provided you have the strategy that has been back tested and forward tested, and over a series of trades it has shown positive expectancy, then you are okay. Just stick to your rules. I know it's hard when you're going through a losing streak. It's very hard, but look at it in the long term. It's not about the short term, guys. Think long term. All right. So you guys, I hope you find this video. I hope you find this valuable. And I know it might be difficult sometimes, but make sure that you actually follow your rules every time. All right. Thank you so much, guys, for watching. And please comment in the comment section. Subscribe to our channel. Make sure that you let us know what you think about this video in the comment section. Turn on that bell notification so that you'll be notified every time we drop a new video. You guys, until next time, goodbye.